today. This is good. All right, got it. Okay, so we were discussing, so today we are doing a little bit of some mind work. And I just want someone to just tell me their simple understanding of a PIP. You don't have to answer from my screen, I'll explain. But what has been your understanding of a PIP? You can unmute very quickly, or you can type. Or what you've taught yourself. Okay, no answer, so we continue. So a PIP.
I think it's
Uh-huh.
what are that's percentage in profit, but I really don't know what it means.
Okay, not a problem. So the term pips or points or pipettes and lots, you will hear these words a lot and you will never stop hearing them in Forex. This is like the basic of basics, okay? And we'll also see how exactly are they calculated. So how exactly do we calculate pips? The unit of measurement to express the change in value between two currencies is called a pip. I know many people don't know this. It is the unit of measurement to express the change in value between two currencies. It's a measurement, a unit of measurement. So somebody has $1,000, another one has $10,000, another one, the market will move equal pips. So whether it is in whatever value, it will move in equal pips. The amount you make, it is all of you will do either 1 pip, 2 pips, 3 pips, or whatever pips you move. The amount you make is dependent on your investment, but the pip will remain the same for all of you. So I give you an example, and I'll go very slowly. Please stop me if you need to stop me. Let me repeat. It's a unit of measurement to express the change in value between two currencies. Now, remember last week, if you were not here last week, I am telling you, you missed, because we covered a lot of what is Forex there, buying and selling. So every time you place a buy, you have bought and sold. I give an example of when you go to the market. You have gone to buy a dress. Someone must sell and someone must buy. So if you're buying, then you will buy the dress and the seller will sell to you. If you're in business and you sell things, there must be a buyer or a seller. So the same thing with Forex. You either buy one currency and selling the another. You don't just buy. You don't just buy gold. It is in exchange. If you're buying gold, you're selling USD. So there is always a buy and a seller in the same transaction. Just like it happens when we are buying bread, when we're buying bananas, and such like things. Now, the difference here is, let's look at the Euro USD. It moves from 1.1050, I hope you can all see my screen clearly, to 1.1051. That 0.0001 USD rise in value is called 1 pip. Now, once you go to your MetaTrader 4, any currencies that look like Euro USD, the pip is always on the 4th digit. The pip is always on the 4th digit. So for example, in our example here, which for us to arrive at the 0.001 USD, all you did is to calculate the difference. So the pip is which letter? The pip is which number? The pip is which number? Try. Today, try. Let us fail until we figure it out. Let us fail forward. As we move forward, we get it. What do you think is the pip under the Euro USD? Anybody?
I think it's number 1.
Number 1, correct. It is the 4th digit, number 1. So, which one? Which number 1? Because we have many ones.
The last, I think the last one.
On the far right, for me, it's on the 5-1, the one that's next to 5-1.
5-1, yes.
Yes, so it's the 4th digit after the decimal on the right. So the fourth digit on the right. So 0 is a pip, 1 is a pip, and that's why we have subtracted like that. So most pairs go with 4 decimal places. So anyone that has 4 decimal places, the pip is always the 4th digit after the decimal. But there's some exceptions. So anywhere you see the Japanese yen, anywhere you will see the Japanese yen, it will be 0.01. Okay, because they have 3 digits, not 4. And we look at the examples, and you have your method to the force, you'll be able to see. So normally when we say put 10 pips in profit, put 10 pips in profit. So in our example of Euro USD, if I tell you, let me not even use 2 digits. In our Euro USD, let's say we want to have 7 pips in profit. What will that be? So if I tell you your TP is 7 pips in profit and your entry point, okay, so many people ask me, what is entry point? Entry point is equals to EP. So when you hear someone ask you, what's your EP? E for echo, P for papa, just in case my English may confuse. So entry point, or E for entry and P for point, that's an EP. So your EP is always your entry point. So why is someone asking you, give me your entry point? Because they want to see, to calculate how many pips can they give you for you to make profits. Okay, so you'll hear terms like, what is your EP? I'm sure now you're used to take profit and stop loss. Those ones you know, and we can still discuss them. So our entry point for Euro USD is 1.1050. The pip is 0. You all understand, because the next pip is in the calculation of that formula. So if my entry point is 1.10050 and I want to do 7 pips, what will be my take profit? Anybody try?
1.1057.
Perfect. 1.1057. So if you're told put 20 pips in profit, you now know how to calculate. Because, or 10 pips in profit. 10 pips in profit, you just add. And remember, we add from the left, not from the right. We add from the left. So for example, if I'm doing 10 pips, if this is 10 pips, what is the take profit? If I tell you do 10 pips, what is the take profit? Anybody?
1.1060.
I think it's
1.0106160.
No, one person at a time.
Okay.
Okay, put it in the chat box. Put it in the chat box quickly. We go through it. Remember, I have said you calculate the 10 pips. So it will be 1.100 because that you start from the left, so fall under the 0 and the 1 will fall under the 5. 0, 6, 0. So did we have a different? Let me see. And if you had a different big issue. Okay, so many of you got it. Yes.
Yeah, please, can I just do it this way? Like now, the first one is the 1.1050.
What do you call that? What you've told me is the first one. What
That's
do you call that?
Is it the euro now? That's the base currency, right?
The entry point.
Okay, it's the entry
called the
point.
entry point.
Okay, it's the entry point. Like now, you said
or EP.
And I want to, like now, you said there is the difference between I think it's the difference between the base and the quote currency. That is what we use to calculate it, right? I'll be the entry point. And I think, is there a situation that you can just bring out the 2 numbers and minus and get it? Like now, you said this one is a 101050. Is there any other number you can just give me a minus? I get that pip.
Yes, if I give you TP,
Yes.
if I give you your take profit,
Yes.
you will minus and know how many pips you're making. Like an example here, this is a perfect example. You have been given your entry point, which is the one that's ending with 50, and you have been given your TP as 51. When you do the difference, you know how many pips they are.
Okay.
Got it?
Yes.
But many times in our group, we never give TP. So we expect that you will calculate for yourself the pip. How many pips do you want to make? So you can decide, or for this trade, I'll do 10 pips and I'm out. So you calculate for yourself the pip value. So you'll decide for yourself what is the take profit. Got it?
Yes.
I can continue?
Yes, ma'am.
Okay, let's look at more examples. Okay, so for Euro USD and any currency pairs that are 4 digits after the decimal, like you can see this one, all of them, the pip is the 4th digits. And the additions, we don't do the additions like we learned in the school. We do from the left moving forward, okay? So that is the pip. Then we have what we call the pip.
Hey.
Is that somebody talking to you?
Let's mute ourselves.
Okay, be connected.
Mute them, doctor, if they're not talking to us.
I mean, hotspot.
So what is a pet? I think you will just, in case you need anyone to comment, you ask them to raise their hand so that you can unmute them. So I just muted everyone now. Can you unmute yourself, please?
Instead. So at Pipette, there are Forex brokers that quote currency pairs beyond the standard or 2 decimals and places there they are quoting fraction of pips, also known as points or pipettes. So if you hear somebody telling you points, it simply means pipettes. Or if someone says pipettes, it simply means points. So that is the same thing. If the concept of a pip isn't already confusing enough for the new Forex trader, let's try to make you even more confused a little bit. This is normally just for fun. But the point or the pipette or fractional pip is equal to a 10th of a pip. Now, let me tell you, ladies and gentlemen, you will never need the pipette. So I normally say we will teach it, but ignore it. Why am I teaching it? Because I have said that the pip is the 4th digit from the decimal. But you will come back and tell me, but I can see another digit after. What is that? So that is called a pipette. But we never use it to calculate nothing. So for instance, I'll 542 to 1.30543. 01 USD move. Higher is 1 pipette. You see now that is the 5th digit. Fifth digit if you want a pipette. We don't need a pipette. It does not make sense. It does not make you money. But it is needed by the leverage and the brokers' funds. So for us traders, we don't need it. And we don't need it also to calculate. We need to earn money in pips. But I mentioned it because when you're going to calculate pips, you might use the pipette as your pip. If you forget that the pip is always the 4th digit or the that digit for JPY pairs, Japanese yen. Okay, so if I was speaking Greek, you should be able to see this. How many here use TradingView? Maybe I need to train on TradingView next time. How to draw charts like this. But this is just a plain chart. How many are using TradingView? Let me see. Because charts are also the things that make you money. Okay, Abigail does good. Okay, the rest we are still beginners, so it's still fine. So on trading platforms, the digit representing the 10th of a pip usually appears to the right of the 2 larger digits. Okay, so you can see in this example, AUD card. If you see on my, so for me, it's on my left, you can see 0.9077, then a small 9. So the pip there is 7, the pipette is 9. Or if you look at the buy side, it's 0.9078. The 8 is the pip, the 4 is the pipette. Okay. So if you look at this chart as well, if you look at the figures, the numbers are 5 digits. The numbers are 5 digits. But when you're calculating your pip, you work with the 4th digit. You simply ignore the 5th digit. Okay? Now, so that's the pip. The pip, I said, told you, is a unit of measurement. That is what determines. So when someone comes and asks me, oh, how much can I make on average? I'll tell them you can do 10 pips every day. You can do 50 pips every day. So they look at me, what are you talking about? I tell them it is not possible for me to tell you you make $10,000 every day. I don't know what your capital is. I cannot also tell you you'll make $10 every day. What if you have $10,000? So the pip, how much will everybody in that market make? Because the move will be per the pip. So let's look at this diagram real quick. So if you put your take profit as 1,000 pips, you will stay with that trade for a month and you will have drawdowns like crazy. But let's discuss this. So the digit before the decimal point, that is 1,000 pips. That is why it's on its own. Then once you start going on the decimal, the first digit will tell you 1,000 pips. The next one will be 500 pips. The next one will be 30 pips, 8 pips, and 0.2 pips. Okay. So pips, remember, I said is a unit. And normally we do between 100 to 200 pips. Okay. We calculate. So for me who loves doing indices, I do, for example, US30 can move 100 pips in a very short time. It can move 100 pips in about 10-15 minutes. So that is why I like to trade it, but it's very volatile. So I am not giving you signals of US30 yet until we are comfortable with currencies and gold, but I'm watching how we are moving. So don't worry, stay put. We will make good money. So that is the pip. Does it make sense for everybody about the pip? Does it make sense? I don't want to move if it is not clear. Any question? Put it in the chat box. Any question? Let me see. Okay, it is clear. All right. Okay. Okay, perfect. These are the things that are in your academy. So things you can revise, but if you had learned, you're having a very easy time. And of course, so let's talk about the lots. People called Abigail. Who is the other one, Doc? Who sends a screenshot and hides the the lot? But it's okay. So Forex is commonly traded in specific amounts called lots, or basically the currency, the number of the currency units you will buy or sell. Okay. Let me let that sink as I look at your charts. Powell taught me a big lesson, ma. This one. In fact, whatever, normally I like what the doctor says, but then if we can grow our account in $2 per day, $3 per day, $4 per day. Imagine at the end of the month, you will still have that account with money in it because it has the compounding effect. But no one has the patience of seeing $5 in the account per day. They don't want. But it can make you a lot of money. So the standard size for a lot is 100,000 units of a currency. And now there are also mini, micro, nano lots sizes that are 10,000, 1,100 units. So look at this, for example. There is nano lots, that is 100. There is micro, that is 1,000. There is mini, that is 10,000. And we have standard lot, which is 100. So when you enter a trade with 1 lot, or 5 lots, or 6 lots, or 7 lots, Do you realize the units of that currency that you're buying or selling? Let me repeat that. The standard size for a lot, standard, when we say you've entered with lot size, standard lot size is 100,000 units of that currency. Okay, let's go to the next one.
Maybe the network took her out. Can you guys hear me? If you can hear me, drop 111. So,
Yes, boss.
okay. I hope we're learning something here. We're learning something, drop 223 in the chat box. Let's wait for Great. Great. I didn't even know, I forgot there was a company called this hour. Great, Abigail. That's it. Everything here is also on the mind of.
Sorry, guys, I am back.
Welcome back.
Can you still see my screen?
No, you've not shared your screen.
Okay. My son is becoming very naughty. Do you know he switches off the Wi-Fi? When he wants me to leave the study and go to attend to him, he just goes and switches off the Wi-Fi. So I may want to do some disciplining after this. Okay, so let's go back. I hope I didn't lose anybody. Can you see? Doc, can you see my screen?
We can see your screen.
Okay. Yeah, Abigail, this boy is very intelligent. Can you imagine switching off the Wi-Fi? And he did that. He has done that for the last 3 days. So I didn't know it was him until now I've discovered what is happening. Okay, no problem. I told you I must stay at home, mom. So where were we? Okay, so mini lot size represents $1 a pip when using Euro USD. And then the micro is 0.0. So those are the dollars you make. So when some of you tell me, oh, I'm only making $1, or I just made, 0.10. Don't worry. A time is going to come when you can do. So can you imagine when we're talking of, let me give you back the screen. So for you to do $10, you're entering with how many units of that currency? 100,000. Let me tell you, if there's a drawdown, you will not know what will hit you. So those $10 you're looking for in one trade. And I may need to go to the next screen so that we understand leverage, so that you see how the PIP, the lot size, and the leverage connects. Okay, so hold on to this screen for a minute. But just know that when you go in with a standard lot, you will get $10 per PIP. So the PIP that I was showing you earlier here. So if if someone entered a trade and entered with the one lot size, and that trade only moved 1 pip, they'll make $10. So there are some people who will go into a trade and only make 2 pips, $20, and they're out. But these are people who are not taking signals because they know what they're looking at in the charts. So they will look at the chart and say, even if this trade goes on a drawdown, I'll have done my 20 pips and I'll be out and I'll have my $20. Again, this is why I keep telling you, learn the skill yourself. Continue learning the skill. Don't wait for people to be given signals. Because with signals, you cannot know what to do. And in that case, you cannot decide whether I'm going to go in with a one lot or not. But if you become a successful trader, you can do that. You can decide, I'm going with one lot, but I am only making, I only want to do a one pip and get out with my $10. Okay, so let's talk about leverage. You're probably then wondering how a small investor like yourself can trade such large amounts of money. Think of your broker as a bank who basically fronts you 100,000 US dollars to buy currencies. All the bank asks from you is that you give them $1,000 as a good faith deposit, which will hold for you, but not necessarily keep. It will hold for you, but it may not keep. So let me repeat. So the broker, so before when we didn't have brokers in Forex trading, it used to be big players, big banks, big firms, and the retail traders and hedge funds were not there. When hedge funds were the first to come around, so a broker was introduced. So the broker acts like your bank. They will say, I will give you $100,000 to buy currencies. But for me to do that, you give me your $1,000, okay, to hold in good faith. And you go and trade currencies. But if you overtrade, I will take my money back. So that is why you're saying, I'll hold for you, but not keep. And this is why we always insist, withdraw your money. So the beautiful thing is, even when you enter with your lot, one lot size with $1,000, at the back of your mind, you know that that $100,000 is not what was required for you to trade, to put down as your investment. Let's go to the next one, so it makes sense. The amount of leverage you will use will depend on your broker and what you're comfortable with. Now, it is very good to have a broker who will give you. For me, I will always work with 300 to 500. If you're a good, for beginners, if you're a good broker, if you're a good trader, you can play around with the leverage the way you want. Leverage, when do you choose leverage? You choose leverage when you're opening your trading account. So you can choose 400, 500, whatever leverage you want to choose. That is the many times you can play around until the $100,000 mark. So you can, it's like multiplying. It's like you're told this $1,000 you've given us, you can leverage it. You can use it 400 times, you know, for you to make money. Now, typically the broker will require a deposit, also known as margin. Margin. Somebody sent us me a screenshot and asked me, what is margin? What are these margin things? So that's called a margin. Go to your MT4. Everyone who has opened an MT4 account. I hope maybe next time we can do practical so that you see. So you will see what is written as margin. So you have your balance, you have your equity, and you have your free margin or margin. And we can discuss the different types of margins next. Once you've deposited your money, you will then be able to trade. The broker will also specify how much margin you required per position lot traded. Okay? So when you enter a trade, you notice that your margin is either going up or down. I will tell you on this call, if your margin is anywhere near 200, trade very carefully. Whenever you see your margin is starting to be 200, start trading carefully because it can go and stop you out. The good thing, the HFM broker gives you until 40%. So you can always, their margin is perfect. HFM is perfect. Some brokers will stop you out at 60%. 60, you're out. So always look at your margin. If your margin is playing around 150 and 200, don't enter another trade, meaning your trades are in drawdown, or some of them are in profit, others are on drawdown. Don't enter another signal when you're given. So someone is asking, what do you mean withdraw your money? When you make money in Forex, withdraw Remember, we keep saying on this call, I keep telling you on this call, have 2 trading accounts. And on your HFM app, you can open as many accounts as you want. Have 2 trading accounts on bare minimum. Have one that you compound, meaning you enter on that compounding account, you enter 1 trade, 1 signal per day. And it makes you $2 fine, $3 fine. That's a compounding account. You're not planning to withdraw. Then you have the second account that one is for making you money, for withdrawing every day. Because this is not your money. You can come one day and blow the account. But because we also know at the end of the year, you can make millions of, let me not even say millions, thousands of dollars. I've been on this call when I've seen doctor explaining to you compounding system. And somebody was even asking him, have you done it? I have done it for the last 3 years. I have an account that only trades one trade. I put my 50 pips and I will not touch it. And I'm done. Because it compounds, and that is the account that takes me on holiday come December. So I don't touch it. But that account, I don't withdraw for the entire year. I don't withdraw. Okay? So, but I have the account also, the one I trade every day. This one is the one for, I can enter 5 trades. I can do whatever I want to do. And for that one, I withdraw. As I make the money every day, I can decide whether to withdraw the entire profit that I made that day or 50%. Okay? So I hope whoever has asked me that, that answers your question. So let's go back to our explanation here. So once you've deposited your money, then you'll be able to trade. The broker will specify how much margin is required per position. You can only see that clearly on your MT4. But if you go to your HFM website, it explains very nicely what margin is given or what lots are given per whatever you're trading. You will now understand why we love gold and GU as we continue. And for me, why I love the USDT. So let's see how to calculate profits. I hope I haven't lost anyone. We are still going together nicely. So now that you know how to calculate PIP value and leverage, let's look at how to calculate your profit and loss. Your profit and loss. So let's buy US dollars and sell Swiss francs. I told you, you must be buying something and selling something. That transaction goes together. The rate you quoted is 1.4525. What you're seeing as in your MT4 versus 1.4530. I hope you know now we are buying, so we bought the dollar, we are selling the francs. So that slash there, that's all it means. Now, because you're buying US dollars, you will be working on the ask price of 1.4530. Let me repeat that again. The ask price is 1.4530. The rate at which traders are prepared to sell. So because you buy dollars and you're selling francs, your ask price is 1.4530. So you buy one standard lot, that's 1,000 units of the currency at 1.4530. A few hours later, the price moves to 1.4550. And you decide to close your trade. I'm going very, very slowly. The difference between the 1.4530 and 1.4550 is 20 pips. Okay, it's 20 pips. Using our formula for lot sizes, so we continue now. We'll come back to this. Oh, I went to okay. Okay. So, first, is it clear until there, or do I repeat it? Are the figures making sense? Are the figures making sense? So, in pips, this is the pip. Okay, please repeat slowly. So let's buy. Let me come back here. Remember we said the pip. So, but then this figure, if it was the other way around, if you are losing, could have lost, it could have been in 20 pips in loss. So let's go back to here. So remember how we learned how to calculate pips and currency, okay, in pips. But depending on the lot size that you entered with. So if we have, the difference is 20 pips. If someone entered with their standard lot, they will make 10 pips. If someone entered with mini lots, they will make 1 pip. If someone went with micro pip, micro is 0 point. So most of us use 0 points. That is the nano lots. Micro lots, 0.10. Mini lots, $1 pip. Okay. Now, so we come here and we come back to this. So we talked about the ask price last time. So we are buying US dollars and Swiss francs against Swiss francs, and we are selling Swiss francs for lack of a better explanation. So we have US dollars as our base, and we are selling Swiss francs. So we are buying dollars to sell Swiss francs. What do we want to happen? We are saying that the quoted rate is 1.4525. That's the dollar rate. And the 1.4530. That's our ask price at which the traders are prepared to sell. Meaning to sell the Swiss francs, okay, against the buying of the US dollar. Go back to the buying and selling of address. There must be a seller, there must be a buyer. Now, a few hours later, the price moves and you decide to close your trade when it is 20 pips in profit. So you'll have made 20 pips in profit. How will that translate into money? It is dependent on the lot size you have entered with. Okay, let me see on the next one whether to try and clear things a bit. The term order refers to how you will enter or exit a trade. The term order refers to how you will enter or exit a trade. So you'll hear sometimes you're told, execute the order now. Put a buy stop. Put a sell limit. Here we discuss the different types of Forex orders that can be placed in the Forex market. Be sure that you know which types of orders your broker accepts. Now, if you're on this call and you're in Europe, Europe is so restricted that there are some orders be platforms and you cannot take. Different brokers accept different types of Forex. HFM, I'm glad, accepts almost. These are the basic type of orders. So let's look at the orders we are talking about. Market execution. So a market order is an order your bid price for Euro USD is currently 1.2140 and the ask price got it? And you always buy at the ask price. So this will help you understand what we just finished discussing. So you will click buy and your trading platform will instantly execute a buy at that exact price. Please keep in mind that depending on the market condition, there may be a difference between the price you selected and the final price that is executed on your trading platform. So this is why you hear some people saying, we are in our TP hit and your TP has still not hit. Because at the time you did your entry, somebody could have already been in. So sometimes by the time we say buy now, we are already in, we enter at the point we say buy now. So if you see that signal 3, 4, 5 minutes later, there is no way your ask price is going to be the same with the people who entered that trade 5 minutes before, or 3 minutes before, or 1 minute before you. So this is why there can be a difference between a signal being given and the signal giver saying TP hit, and you're wondering, what are these people talking about? So that is direct execution, which is what we normally use. You will also sometimes be sent just a chart and you're told limit entry order. A limit entry order is an order placed to either buy below the market or sell above the market. So I hope this image I have here for you does justice or tries for you to understand. So let's discuss the buy limit. The order is placed below the price. And when the price, and then the price goes up. Should I look at a trade? Should I look at an empty balance? I'm trying to look for a setup on my phone for a trade you can enter now so you understand it.
Okay.
Yes. Now, okay, the market is still correcting yesterday's fundamentals, so we can always learn it practically next week. Okay, so the sell limits, the order is placed above the price. I hope when you understand above the price, meaning if we are supposed to sell at, say, 10, let me use the word 10. And so the price is placed above, so it is placed like at 11. And then when it comes down to 10, it will activate these sell limits. So it is placed above. Many people sometimes when they're trading news, they want to do that. So that because you don't know whether the trade will go into a buy or a sell. So you create a limit that if indeed the news or the fundamentals are going to make this trade reach this price, then it will activate my trade and go in the direction that I want it to go. Okay, I told you today there'll be a lot of numbers. So I'm going slowly and we can repeat it practically next time. For example, Euro USD is currently trading at 20.50. You will want to go short if the price reaches 20.70. You can either sit in front of the monitor and wait for it to hit 20.70, at which point you would click a sell market order, okay? Or you can set a sell limit at order at 20.70. Then you walk away from your computer to attend to other duties. If the price goes up to 20.70, your trading platform will automatically execute a sell order at the best available price. You use this type of entry order when you believe the price will reverse upon hitting the price you specify. This is why I say this is very popular with fundamental traders. A limit order to buy at a price below the current market price will be executed at the price equal to what you put. A limit order to sell at a price above the current price market will be executed at the 2 or more than specific price. So what I want you to do is this. Take a screenshot of this, and tomorrow, if you see any signal of buy limit, sell limit, what entity you have been given, because this might make sense practically, but it needs to be also explained in theory. Okay. Now, buy stop. What's the difference? A stop entry order is an order placed to buy above the market. Remember, the other one was below. And sell below the market at a certain price. So let me go back. Let's look at this buy stop first. Order is placed above the price. You can see my green line there, horizontal line. So that's the price. So the order is placed above price, and price keeps going up. The sell stop order is placed below the price and keeps going down. Let's see the difference. This one, the order is placed below price and the price then goes up. So meaning it might not even be activated sometime, because if the price never reach here, that trade will not be activated. But on this one, the buy stop is that an order is placed above price. Okay, and the price keeps going up. So we're expecting that this trade either keeps going up or keeps going down. Okay, that's what's called a stop entry. Let me see what you're asking me. I told you today is we have one limit order today. Oh, on the shift tab. I normally don't take those trades. They are very good trades, by the way. They are very good. So, but where on your MT4 should you put the limit? So normally we just click buy or sell, but on your MT4 at the very top, before you do buy or sell, there's normally where it says market execution. Okay, let me enter this. Let me enter in my phone. I hope it will not give us an echo so that I show you. Stay with me. I just want to join from my phone.
Recording in progress.
So Doc, can you allow me to share on my phone, from my phone? Oh, somebody did it for us. Okay.
Okay.
Let me see, who is this? Abigail.
Let me. What's the name of the phone?
Still Helen.
Ellen, okay. Okay.
Okay, let me use account that I don't. Okay. So for example, let me use the gold. You cannot see my screen?
Yes, we can see it.
All right. So what you do is you do new order. At the very top here, it's written market execution. So do you see that? Do you see that? So when a signal is given, buy limit, sell limit, buy stop, sell stop, that's what it means. you don't do a market execution. So when we say buy or sell, that's called a market execution. You're doing it immediately. When we say buy limits, sell limits, you click where the market execution is and it gives you a drop down. So if you're to do buy limits, it looks like that. And this is the importance of knowing the EP or the entry price, because then whoever has given you a signal will say, let's say you're buying, your entry point will be 18, it's a buy stop. So that's so 1850. No, that's good. 1825. So you must know what is the entry price, EP. So that's the EP. So when that price comes and hits 1825, it activates my trade. I can then go ahead and put my take profits or my stop loss. And you can see I can even put an expiration. I can specify a period. So I can say if it doesn't activate within, it deletes that order.
Wow.
Okay. Person giving a signal, or even if it's your as you continue, as saying gold is going to go until 1825. So at that point, I can put a buy limit. So my phone, or I may be busy, or the market may hit 1825 and activate my buy stop. I put my parameters and I go. But I also know it will not do that for so does that make sense?
Yes, very well.
So I need to get out of this phone so that I don't. So I've gotten out because of the echo. So that's all it means. So this is why I said, what time was this? Oh, it's still there. We have one on the shift app is still pending. It hasn't activated. So you wait, okay? Now, the importance of attending the live sessions also on the B platform is because then you're able to ask, what did you look at for you to give us that pending order? So the person is able to tell you, I'm looking at this chart, this is what I'm doing. And that is how you gain experience. As a matter of fact, the buy stops and the sell limits and limit orders and stops and limit orders are very good because they also help you study. So if you have a limit, you'll wonder, what did this person look at? It gives you a chance to study and to understand how the charts are going and what strategy or analytical analysis the person is using, okay? So I hope that has helped. And that's why I say sometimes it's hard to do this without practicals, but it's okay. It's our beginners session, so it's fine. So you can practice what we've done. Just see, they will definitely give you an entry price, a take profit, and a stop loss. That's for sure. So if you don't know what entry price is, you struggle. This is why you guys don't take those orders. I hope from tomorrow, you will start taking those orders. Now, remember when you take a buy stop or sell stop, it doesn't hold your margin until it activates. So it's a very good system to also use, okay? So we go back here now. Okay, so pay attention to this. And I want you tomorrow or tonight, if you guys look at what they put in as a limit order and a limit and a buy stop order, okay? So let's continue with the buy stop. So for example, GBP USD is currently at 50.50 and it's heading upwards. And one of the following to play disbelief. You can sit in front of your computer and buy when the market hits 50, 60, it's what I was telling you. We know gold is going to go to 25. We can sit and watch it until it goes to 25, or we can set a stop entry order at 50 so that it activates at that point. So sometimes as you don't have to sit and keep staring at the screen until the market hits where you want for you to call to enter the trade. You can do these orders to help you. So assuming you're going for a meeting, but you know that this order, if it gets to 60, for sure it is a buy order. For sure, they sit at 50, 60, they will definitely buy, because that is where it has gotten out of the resistance box, or but now you have a meeting, or you're going for an office meeting that may take 3 hours. Don't miss this trade. Just enter a stop order or a limit order. Stop loss order. A stop loss order is a type of order linked to a trade for the purpose of preventing additional losses if the price goes against you. So stop loss, everyone understands what stop loss is. If you're in a long position, it is a sell stop order. Meaning if you're in a buy, we discussed this last time, long and short, what they mean. So if you're in a buy, then the sell stop, it will be below, because buy should be going up or long should be going up. So if it reverses, that ends up, it will be on a drawdown, meaning it's going towards the sell. Then your stop loss should be below the buy. Then we have the short, it's above. At least this one, I'm sure 100% all know how to put a stop loss or a take profit, because the B platform gives all those. Stop losses are extremely useful if you don't want to sit in front of your monitor all day and lose all your money. So using stop loss is good if you're not in front of your computer. If you know you're there in front of a computer, don't use stop loss, because sometimes the trade comes and hits stop loss and goes back and gives people profits. And also, if we are trading that trade, like many of us, myself, Patricia, who gives signals in this particular group, we try to ensure that we close our trades within two hours. So we don't need a stop loss, because it will go into a drawdown and then it will give us in profit. But you did not hear that from me, because the rule is you should put a stop loss at all times to avoid losing your money. Sometimes it can go into a drawdown, and before you realize you just have to jump out, because you will lose your trade. So always use stop loss, especially when you're being given a signal by someone you don't know what they're looking at. Take the stop loss. And I want to hear your experiences of stop loss, by the way. Now, the one I love the most is what we call the trailing stop. This one is sweet, because when your trade goes into profits, just now you know how to calculate pips. If that trade goes 20 pips in profit, just trail at 5 pips, give you 5 pips profit. If 30 pips in profit, put your trailing stop at 10 pips. It is still, even if it goes on a drawdown, it will stop at 10 pips. So let's say that you've decided to short, which is to sell USD JPY at 90.8 with a trailing stop of 20 pips. This means that originally your stop loss is at 91. Okay. If the price, because stop loss above, I hope this you understand why. If the price goes down and hits 90.60, your trailing stop will move to 90.8. You have broken even. So even if that trade goes on a drawdown, it will stop you at the entry price. Just remember though that your stop will stay at this new price level. It will not widen if the market goes higher against you. Okay. So going back to this example, with a trailing stop of 20 pips. So UJ hits 90.40. Then your stop is 90.60. You have locked in 20 pips in profits. I hope I am making sense. So sometimes don't see money and you say, I've made money, let me jump out. No, You have seen money, calculate how many pips has that money moved. And then decide if it has moved 10 pips, then let me put this trade at entry price. Let me put my stop loss at entry price. Because it means even if there will be no drawdown at all, there will be zero drawdown. And then if the trade moves 20 pips, I can put now my profit at 5 pips. So even if this trade goes on a drawdown, it means it will stop me out at 5 pips. Now, what I love so much about the B platform, I love it, is because they give you TP, TP1, TP2, TP3, TP4, TP5. So what do? You put like TP3 as your take profits. And then you monitor your trade. If that trade hits TP2, your TP1 should be your new stop loss. And then you move your TP3 to TP5 because you don't want to get out of this trade. You want to continue this trade making you money. If it goes back, it will stop at TP1 because you have put TP1 as your new stop loss. And if it hits TP3, if it hits TP4, your TP2 becomes your new stop loss. And then you move your TP5 to TP6, depending on how many TPs they've given you. So you can actually move with this person until they hit TP7. You never got out of that trade, but you have been having a clean trade because even if that trade goes on a drawdown, it will either stop you at what was given as TP1 or TP2 or TP3. So instead of you jumping out and losing money, don't say, they gave TP5 and the trade went on a drawdown and got me out at TP2. It's okay. It is better than you jumping out. So training, I love training. Let me tell you people, I love training. So let me see. You have to wait for it to hit, and I'm giving at least 2 TPs difference. At least. So if your TP is TP5, your trailing TP should be at TP2. Even if that trade moves back, it will hit TP2. You still will have made money. It's better that than not making any money, okay? But you have to be there to see, yeah, this one you keep checking how far has it gone, because you don't put TP5 and you go and forget everything. It may never hit TP5 in 2 days. The drawdown will finish you. That's what I'm saying, put a trailing stop loss, which makes sure that you get out in profit either way. Okay? Trailing is one of my favorites. All right. So in conclusion, the basic Forex trader order types, markets, which is what are called the market execution, the limit entry, stop loss, and trailing stop, are usually all that most traders ever need. The current price is a blue dot. So if you take a screenshot of the limits that you have been given on the Shift app, I want you to look at, are they obeying this screen? So the blue dots is where the market is at, is what the current price is, and see whether it has obeyed these particular rules that we have put here, okay? So I just talked about the demo. Normally, when you're trying something new, even trailing, try and do it on your demo account, because demo is free, it is zero risk. Just make sure, and again, why I love HFF, just make sure that your demo account, the amount is as the amount that you have in your life. If the amount has $100, let your demo have $75. Let your demo be equal or less than your live account, because then it will give you realistic results. Backtest, we call it backtesting. When you're learning a new strategy, use the demo to backtest. So, and use the entire of this week to backtest your buy limits your sell limits, your stop, your trailing stop loss, trailing loss, trailing orders, all those. Practice. Let me tell you, by the time you go to your live, you will not make mistakes of asking. So why is the entry price again? Why are we putting it again? No, practice here. And as usual, I normally say, ask. Come to our inbox, go to doctor's inbox, ask on the group, remind me, where was the buy limit? Where were we entering? All that. Okay. So, any questions until there? I think I want to stop there because the next topic, trading is fun, believe me. So this is all about a demo trading, okay? But any questions before even we continue there? I knew today was going to be a tough to worry. To internalize this topic, we will have to do a practicals and just comment in the group, how is the practical coming along? I know in 15 minutes we have a presentation. So I would want to stop there, and then we practice these limits and the lot sizes and all that. Then next week, Dr. Charles, if you allow me, instead of doing a theory like this, we do a practical training. Is that in order?
That would be fantastic.
Yes,
that would be fantastic. So is it same time, or we should move the time upward where this?
It should be same time. We can still get trades.
This time, huh? Okay.
Even at this hour, we can still get trades. It works perfect for me because then I'm already at home.
Okay.
Yes.
That
Jocelyn, your hand is up.
Yeah, can you hear me?
Yes.
Okay, you said we could, when we're using the demo, we could use an amount that most of the demo gives us those big amounts. I don't know if it's possible to reduce them.
Yes,
But
it's possible.
right.
You can reduce it,
It's
like
possible.
HFM has 5,000 limit.
Yeah.
You just leave it at 5,000.
No,
No,
I was hoping
HFM demo, you can reduce it. You can reduce
Okay.
HFM demo until $100. What do you mean?
Okay.
Because what I'm
I
seeing
don't know.
here was 5,000 or so.
So you go to the demo account. Let me see. Let's see on my phone. So open your demo account on your app and go to the, what is it called now? Go to your, click inside it, like click the demo account inside and to the balance and edit that balance. It has funds. Reduce those funds. Go to your demo account, click inside the demo account, the account number, the balance, the leverage, the funds, and reduce those funds to the amount that you want. And if you don't know, very quickly, just text your account manager and they can help you reduce it. It's
Okay.
Okay, all right. I may not be able to do the end of this week because I have consultancies for this week. Actually, this month has a lot of International Women's Day thing, a lot of things that I'm doing. So I almost even canceled this meeting, like I was saying at the beginning. But because I made a promise, so let's stick with Wednesday. Somebody is asking, can we do towards the end of the week? This week will not be possible, but next week we can see if we can do 2 sessions. One during the day where we actually do the trading and enter and exit. But this week, unfortunately, I am very My calendar is very tight.
Okay.
They should refund me on my demo. I've made a lot of profit. Ignorance is no defense. So ignorance is costly. That demo account, reduce it to the money that you know you will be able to use. Okay. All right. People I see asking some questions in the group, and I don't see them on this call.
That's the issue.
And then they come and bring problems for us. Okay, but it's okay. That is life. Only 2% make money anyway because they want to learn. Yes, yes. Okay, so may I end there?
Okay.
I know today was tough, but if you are taking screenshots, keep reading the notes and do it practically. Then next week we do practically together.
Awesome. Awesome.
Yes, somebody's saying knowledge is power. Knowledge is not power. Application of that knowledge, where the power is.
Yeah.
Yes.
Please, I want to ask, make a request. Okay, please, can we shift this our timing to 7 o'clock? Because most at times on Wednesdays I'm already on the road. I only meet up